Welcome back to Business on City News 570, powered by Cowan Insurance. And it's that time of the show when we actually are joined by someone from Cowan Insurance. And this is a new friend for us, Greg. At our age, we don't have many new friends, but we have one today. We have Matt Loker, and he is an associate advisor at Cowan Insurance Group. And Gregory, one of the things that I think I just said on air, I'm certainly worth more dead than alive, and it's because I have the right life insurance. So
yes,
that someone will benefit from the fruits of my labor long after I'm gone. But it is important to have to protect yourself, your business, and your family. And so we wanted to talk with Matt about that today.
Well, and that is the key issue here. It's really about having an advisor come on and talk to us about one particular type of insurance that can give you the same security, but we really want to talk about the difference between term insurance and mortgage insurance. So, Matt, welcome to the show, and take it away and let us know what are those big differences.
Yeah, I'm glad to be here, and thank you for having me. One of the biggest difference between term versus mortgage insurance that can help decide which one is best suited for you is, number one is the beneficiary designation. With term insurance, you get to decide who you would like to receive the money, whereas with mortgage insurance, it would be the mortgage lender that has to be the sole beneficiary if you pass. So that's one key benefit of, term versus mortgage is with term, you get to choose who gets to keep the money. With mortgage, unfortunately, it just goes right to the mortgage lender. Another key difference would be the portability of the coverage. And with term insurance, your payout / benefit remains the same and never changes unless you make any changes. With mortgage insurance, coverage would decrease over time as your mortgage amount gets smaller. Therefore, the payout would be less after several years from when you first purchased the coverage, even though you're paying the same premium.
Well, so when we get to cost, this is always one of those things. And some people kind of say, especially when they're younger, say don't need insurance. They can't imagine themselves passing or something happened to them. And that's a risk that some people, I guess, unfortunately take. The younger you get insurance, the cheaper it is over time because you don't have the same requirements, or the actuarial tables allow your rates to be lower to begin with. So there is some benefit. Maybe you can touch on that, but also the cost. You touched on the mortgage insurance. The benefit goes down as you're paying off your mortgage. Yeah. If you choose that one, does the premium go down? Because the premium would stay static with your term insurance, but the benefit is like if you're paying for $750,000, you get $750,000, and the premium reflects that. Maybe talk about that, because people will be interested in the costs and what's the most cost-effective way to protect themselves.
For sure. So, given the cost with insurance, over the course of time, the cost versus mortgage versus term insurance can be very different. Specifically with term insurance, like you mentioned, you get access to the best rates and different coverage options when you apply when you're younger and you're in good health. There is really no magic formula, I would say, to determine which one costs less than the other, as every individual will have different health statuses and different coverages for their financial needs. I may need more coverage than you, but you may have some health issues that may cost more. So determining the cost can be, there is no real magic formula to determining that.
So the cost, when you're looking at the cost benefit analysis between term insurance and mortgage insurance, it really depends on what you need it for. Mortgages generally are a long-term investment, so they're 20, 25 years, not unlike a term insurance. Yeah. But your bang for your buck is probably better at a term insurance policy because you're getting more coverage for the dollar on an ongoing basis, or a duration over the duration of the mortgage, than you would be for a mortgage, because it's decreasing, yet your premiums are staying static.
That is correct. Yep, you are correct with that. Yeah, with mortgage insurance, you're paying the same premiums, even though the coverage is going down, whereas with term, the coverage stays the same and you're paying the same premiums.
So Matt, in the last couple few seconds that we have here, tell us, how should you how should you make that decision on whether you should be buying mortgage insurance or whether you should be buying term insurance?
For sure. So knowing the key differences between the two will definitely help determine which one is better suited for you. Some individuals like the convenience that mortgage insurance offers, with the premiums in some case just being added on to the monthly mortgage payments. Some people just like that, convenience factor, especially if, maybe you're just a single guy, single girl, and you just have a house, but you have to have insurance, because to take out a mortgage, you typically have to have either mortgage insurance or life insurance. So that would be one option if you were in that situation. Others just like the flexibility and options they have with term insurance, but your financial needs will also determine which one is suited for you.
Awesome.
Oh, listen, it is, sometimes we don't want to talk about these things, but it's important to protect your big, and we've said this before, your two biggest assets, if you're a business owner, your business and your home and your investments on both sides. And it's important to make sure they're protected, that if the unfortunate and unthinkable happens, that you leave those that are left behind in a position to continue on. So always great advice, and thanks. Hey, he's great. He's been a great guest. We're gonna have to have Matt back on.
Yep, for sure.
Thank you for having me.
You're welcome. It's great to have you. We've been joined by Matt Loker. He's an associate advisor at Cowan Insurance Group.